We've got some breaking news out of the energy industry today. Chevron just out with news earlier in the last hour saying that it's going to be cutting its guidance for 2020 when it comes to capital expenditures. It'll be cutting it by 20% from $20 billion down to $16 billion. It says that it's also going to be suspending its $5 billion share buyback program, but the dividend is safe, at least at this point. Joining us right now to talk more about that is the Chevron CEO Michael Wirth, also our very own Brian Sullivan, who covers the oil industry for us. And gentlemen, welcome to both of you. Michael, let's talk a little bit about this news this morning. Maybe not a huge shock given what we've seen happen to oil prices over the last month or so. With oil prices right now at $24, what does that mean for you?
Well, good morning, Becky. And first of all, our thoughts are certainly with those who have been affected by this virus and the healthcare workers on the front line that are combating it. We announced changes this morning that really demonstrate the resilience with which we've positioned the company. We come into this very, very strong. We're taking actions to preserve cash. It will have some impact on production in the near term, but we've stayed with our financial priorities, which include protecting the dividend, as you mentioned. And we've seen circumstances like this before. We know what to do, and we're doing it.
Michael, I have to say that probably is the biggest news coming out of this, that the dividend is safe at this point. If oil prices were to fall to $20 or below that, how much additional pressure would that put on you? The guidance that you're issuing right now, you're assuming oil will be what, let's say, over the next year?
We haven't put out an oil price forecast because that's a difficult thing to do in an environment like this. It's an uncertain market, which is why we've taken actions on the things that we can control. We can't control the health situation other than work with our employees. We can't control oil prices. We can control our rate of spend. We can control things like the share buyback. We had already embarked on a restructuring to become more efficient. And so we'll continue to focus on those things. Our dividend is our number one priority. It's very secure. We haven't cut the dividend since 1934. And we come into this with a position that is stronger, really, than just about anybody in our sector. And we intend to stay that way.
Brian?
Hey, Mike, it's Brian. Good morning. The big debate right now appears to be how severe the oil storage scenario is. And there's a school of thought that pretty much all the tanks, all the offshore ships pretty soon are going to be filled up, and then we could have another severe drop in the price of oil. What are you hearing about inventory and storage levels, and how severe is it out there right now?
Well, Brian, I think you're tuned into what is an important issue to be watching. We already had seen inventory levels in the world were higher than typical. Now this dramatic decline in demand that accelerates as we see more of these economic shutdowns occurring not just here in the United States, but also in other parts of the world, which further slow economic activity and demand at the same time as we're about to see increased production come from Saudi Arabia, Russia, and some other countries. And so, look, it's a pretty simple lesson in markets. We're going to see demand down, supply up. The balance of that has to go into storage somewhere, so it will go into tanks. It will go into ships. We've seen shipping rates go up as ships are often used as floating storage at a time like this. And that's where the balance will go. We don't have infinite storage, and so I think it bears watching to see how this market responds as inventory levels go up around the world in all different types of products. And there's not one.
Do you believe, Mike, that, sorry to jump in, do you believe, Mike, that the U.S. government needs to do something to try to get Saudi Arabia and Russia back to the table to try to coordinate some kind of OPEC-led response? Does there need to be, even in this time where pretty much everybody's efforts are fighting one enemy, which we all know what that is, does there need to be a political response to try to coordinate something to end this global price war, which really set off the oil price slide before the coronavirus scare?
Well, it is unfortunate that the oil price war has come in right on top of this global pandemic. I think both of the primary players on this, Saudi Arabia and Russia, thought this through before they began the price war. I don't think that it was not a rash decision. I think it was a considered decision. And I think we have to take them at their word that they intend to see this through. In past periods of time like this, and we've seen this in the 80s, the 90s, and earlier this decade, there have been, in some instances, efforts by leaders from the United States or other countries to intervene to try to approach the countries that had engaged in these kinds of actions and help them see things in a different context. Certainly, political dialogue is always helpful, but I don't think we can count on it. We're taking actions on the things that we can control. We're preparing for a difficult market, and as I said before, our company entered this in a position of strength. We're taking actions to preserve that strength.
Hey, Michael, let's talk about capital expenditure. By cutting it by $4 billion, from $20 billion to $16 billion, what does that mean in terms of your existing workforce and potentially any hiring you might have had planned for later in the year?
Well, Becky, lower activity levels generally mean we've got less work to do and we'll need fewer people to do that work. So this ripples into the service companies that support our activities, the contractors that we hire to do work, and it will have some impact, no doubt, within our own workforce. Earlier last year, actually, we had indicated a desire to improve returns, become more efficient. Our geographic footprint has shifted, and we've become more focused and concentrated in fewer locations with larger scale, and have embarked on a restructuring program before any of this began that would create a more efficient operating footprint for us. And that does mean there will be some workforce impact. So I think as we see across so much of the economy, there are likely to be some implications for jobs.
Hey, Mike, you made the point that, yeah, it's unfortunate that we have this pandemic at the same time that we have the price war. Well, people have to decide what they do. And I'm not sure the price war is inevitable. Maybe it was. Maybe Russia has its own domestic issues, Saudi Arabia, OPEC as well. But there's been conjecture that certain entities wanted to make it really tough for our producers here and our shale producers and really put them out of business. Who should we be most upset with? The Russians, they're not our friends. We already know that. But the Saudis, we've done a lot for the Saudis. I mean, should we look at Saudi Arabia with a more realistic view of what they're in this for? Or who are you upset with? Can you just speak to that?
Look, it doesn't do me a lot of good to become upset with anybody. These are large producers. They have complex interests, state-owned companies that are integrated into their economies. They have their own strategies, which are not always purely based on market objectives because of the state-owned interests there. And they're not even historically parties that have really collaborated. What we've seen in recent years is somewhat unprecedented for Saudi Arabia and Russia to coordinate here. So I don't think it should be a surprise to us that there have been some strain in this relationship, that people have seen things differently. And so, look, I don't have a lot of time to be angry with people. We've got to run our business and run it well, prepare it for an environment. In a commodity business, we know these things can happen. This is the fourth time in my career I've seen prices drop by more than 50% in a very short period of time. We've been here before. We know what to do. We're taking action to
Mike,
do it.
In terms of
I'll let others deal with the blame.
Well, okay, maybe others need to deal with it, because in terms of geopolitical things that we do, we need to, we do have policies that we pursue with Saudi Arabia. We do have policies we pursue with Russia, and I'm just wondering whether we act differently based on. I mean, this was the worst time that they could have possibly decided to engage in this. And I understand it's business, and in business, a lot of times that takes precedence. But I just think we need to be realistic about the relationship we have with these countries and maybe act accordingly in the future. Is that too much of a stretch?
Well, I'm a businessman. You're really getting into political issues, and I know our government is engaged in this, and I know our government historically has been engaged in this, and there are important state-to-state interests that extend from the U.S. to both Russia and Saudi Arabia, and channels for dialogue on those things. And look, we want to see a healthy energy industry globally. We want to see all producers able to employ people, supply energy to the world reliably, affordably, and compete in a market that rewards the producers who are efficient. I think Russia and Saudi believe that they have pulled production back the last several years, which has made room for lower, less efficient, higher cost producers at the expense of more efficient producers. And I think that may have frustrated them. So we'll see how that plays out and what steps the U.S. government chooses to take.
You know, Mike, there's a lot of families that are probably scared across Texas right now for a lot of reasons, not the least of which, of course, is the job scenario. We know that many of these companies are unlikely to survive in the Permian, the heavily indebted ones, both public and private. I would imagine with your balance sheet and your cash that you would potentially look to go on some kind of a shopping spree when this is over. Is it likely that Chevron will come into these hard-hit areas when this is over and help pick up the pieces and do some deals and buy some companies? Because those employees right now are probably wondering in 6 months, 1 month, 12 months, where they're going to work.
Brian, you know, I think now isn't the time for me to speculate about things like that. We're certainly focused on making our way through here in the immediate term with a strong financial position, and I think that's what other companies are focused on as well. There will be a day to see what changes this may lead to within the industry structure. We've certainly seen things in the past, such as you refer to, and no doubt the day will come when some of that activity occurs. We're really focused right now on taking the immediate actions to preserve the strength we have in a balance sheet that's stronger than any others in the industry, to bring our break-even price down, further reduce our costs, and ensure the health of our company for the long term.